Namaste, good morning. Friends, welcome to the classes. I call these classes as direct to examination class. I just want to give you a quick introduction and go into the subject. What is the difference between a regular batch and a direct to examination batch? In a regular batch, I discussed a lot of law, how it evolved, how it emerged, and try to tell you the nuances of the law that will be helpful for your practical world also. But here I'm only focusing on exam. What is going to be, how our examiners has been repeatedly testing, what sort of questions can come and how to answer those questions. So this is more than sufficient to take you to the examination. My intention is very simple. From here, you should be able to go to the examination hall and score the exemption. When I say from here, suppose I also want to tell you a regular batch will be a 150-hour batch. Here it is 100 hour, not a big difference. Okay. I always feel that every subject should be confined to 100 hours. If I teach you for 1 hour, you should at least score 1 mark. That's my thinking. Okay. What's the point of teaching you for 200 hours and make you score right for 100 marks? 1 hour, 1 mark is something which is very much feasible. So how we are going to make it, that and all, as the class goes by, we will discuss. So do not worry about that. Probably I'm going to revise the topic. No, I'm not going to revise the topic. I'm going to take the topic from the top, from the first aspect itself. That is, I am thinking that you are fresh to income tax and then only approaching the subject. So do not worry that whether the classes are only for those who are revising. No, it is also for those who are revising. It is also for the first time learners and also for people who want to understand it again from the examination perspective. So all these things are covered in the classroom. In the classroom, we are going to work out a lot. We are going to write a lot. I will ensure that your fingers pain, okay, at 11:30 a.m. that your fingers start asking you for some rest. The reason is very, very simple. Every time when I encounter people, the first thing they say is they are unable to complete the paper. And we come to a conclusion that it is a lengthy paper. I'm not denying the fact that sometimes it is lengthy. Sometimes it is due to this complaint we never had in Inter, because at that time writing was continuously a practice. We were out of school or just out of college, so we were always writing. For the 2 years, 2.5 years, you have never seen, you have never written even one page. Everything is system, everything is computer driven, and you have never calculated tax. You ask a machine to calculate tax, a software to calculate tax. So what happens? Suddenly to come back and write, that writing speed is lost. When the writing speed is lost, we always tend to write slower. So we feel that the paper is lengthy, that I'm unable to complete it. So I want to break that also. I want to ensure that you get the writing speed. It is how our mind thinks, how we are executing it in the paper. That is all. It all boils down to that only. So that's why I am very clear to you that I am going to make you write a lot. That also I want to at the outset say. And every day the class, whatever days we have planned, Wednesday, Friday, Saturday, Sunday, 6 to 11:30, there will be a totally half an hour break, 10 plus 20 minutes. Okay. 10 minutes for your refreshment and 20 minutes for your breakfast. That will be a half an hour break totally. But so if you take 5 hours, 20 days, 100 hours, we will hit at it. We will do the international taxation part also elaborately and complete it. in your hand, they would have given you this particular book, which is a question and answer book, You have all the answers there. Okay, whatever I'm going to discuss in the classroom, the answers are already with you. So, but I know you're all very extraordinarily talented in auditing. So don't audit the answers. Okay. I assure you, you have to work out the answers. That's why in the group yesterday, I posted something known as a practical material, which will never have answers, for which we are going to write the answers. And I assure you to give this book also as the days goes by. I have already posted it in the group. I'll give you a printed copy of this material also, so that this will be useful to you. And this is a condensed theory for almost 200 pages. In this 200 pages, you will be able to see the whole theory, case laws, everything in a very condensed manner. And this is going to be our main aspect of theory. The longer theory, the bigger theory book that they have given you, you can use it wherever you are not understanding the law. Otherwise, this will be more than sufficient for you to cover the theoretical aspect of it. So, this book also, I have told them to give you a printout of this book as the class goes by, and those students who are online, attending online, as the class goes by, you will get it, and those who are here, you will get it whenever you are, right? So, if you ask me, in my content page, I'm just spending some time to make you understand where exactly and how exactly we are going to approach. As of now, leave these two areas. We are going to start directly with PGBP. Rates of taxation. What I do in my regular batches, I do it once in the beginning, so that people understand the rate. Then in each of the chapters of assessment of companies, assessment of firm, LLP, assessment of individual, I again do. Okay, this time I'm directly going to go and do it there. We will compute all the taxes, we will understand all the taxes, so we will be going there and doing it. So our classroom will start with PGBP, and then this is a standalone chapter. This is a standalone chapter, which means there will be a separate question also from capital gains. Majority of the time, slum sales, demerger, okay, business restructuring, okay, like that. There are separate questions in capital gains chapter. So capital gains, okay, and then we will see some business oriented deduction. All these learnings will be from here to here. You will be understanding better. So if I call this as part 1, this is part 2. In part 1, there will be lot of vagueness, where these questions are leading to, where these provisions are leading to. I am reading it in smaller parts, in tiny drops, but you should hit that part 2. Then you will be very clear. Oh, I have to apply these provisions like this. I have to apply this case laws like this. So, so approximately in 2 weeks time from now, approximately by July end, you will be clear about that, some 25-30 marks. Oh, this is how it is being questioned. This is how I have to answer those questions. And the last week is dedicated to the international taxation of 30 marks. In between are the arena sure short questions like TDS. There is a sure question from TDS every time. It can be case law based, etc. Then comes the assessment procedures. So like that only we are going to divide it and study. So starting from profits and gains, be sure that as the journey progresses, you will get more clarity. Initially, I am making you understand in tiny drops with the only intention As the class goes by, you will be more clear. I am accessible. You can voice note me. You can text me. I will answer your doubts then and there. But be very dynamic for this 20 days. Don't think of missing classes. Never miss classes for this 20 days. It is very essential that we stay together in the classroom. As far as possible, attend the class in person. That will be really helpful for you to work along with me, to work in front of me. But those who are unable to, I take the online option also. But it will not make any difference. I'll give you the same online students. I'll try to give you the same feeling as you will experience here. Without wasting much time, I'm going into the first arena, that is profits and gains of business or profession. In your notebook, the chapter heading, profits and gains of business or profession. In your notebook, the chapter heading, profits and gains of business or profession. Profits and gains of business or profession. Section 28 to 44. Section 28 to 44. Okay. Right, friends. Let's start now. For some time listening only, then I'll tell you when to write. See, this PGBP chapter is divided into 4 parts, my dear friends. Just listening only, this is divided into 4 parts. Income is only discussed in 2 sections. Out of the 16 sections, 2 sections gone away. Okay. Out of the 16 sections, only 2 sections speaks about income. Section 28, which is the basis of charge, which gives you a direct relatability with what is the income taxable. Section 41 is deemed income. Section 41 is deemed income. Only 2 sections speaks about income. And then the major discussion is on expenses. Okay, which is divided further into 3. That is allowed expenses. The law says yes, you can claim. That is allowed expenses, section 30 to 37. Disallowed expenses, the law says you cannot claim. 40 and 40A. Only on payment basis, these 43B. So, the entire stretch of this chapter, the entire stress of this chapter is on expenses rather than income. Income, only 2 sections speaks about. We all know income tax department has inbuilt provisions where it checks the income of a person through the expenses of another person. Another person's, one person's expense become another person's income. So they are very particular and focusing here so that through that person they can also identify the income. Section 43 is full of supportive mechanism. Except 43B, if you look at 43, it tells us block of asset definition. It is there in 43. Under the present law, it is there at 43. Various provisions where I need to find out what is the cost of the asset. It is there in 43. We'll see in some time. So 43 gives us lot of support. It is more of a supportive section, and administrative convenience is 44. 44 consists of administrative and presumptive computation. 44 consists of administrative, maintain books, get them audited, administrative coming, and then there is something known as presumptive computation. This is how the chapter is divided. The chapter has only two sections which focuses on income, and the major aspect of this chapter is expenses. The focus is going to be understanding the expenses, allowability, disallowability, etc. And then the supportive and the administrative provision. This is how the PGBP chapter is divided. Okay. You need not take this, don't worry. First, let me tell you this chapter. What is profit? What is profit? Profit is surplus from a recurring activity. What is profit? Profit is surplus from a recurring activity. Regular activity is known as profit. Repetitive activity. When I sell stock, I get profit because day to day I am selling that. What is gain? Surplus from a rare or isolated activity. Surplus from a rare or isolated activity is known as profit gain. Again repeating, surplus from a repetitive activity, surplus from a isolated activity which is not performed day to day. When I sell stock, what I get is profit. When I sell asset, because I don't do it daily, normally for all gains we have a chapter called capital gains. For gains we have a chapter, all these isolated activity gains, we have a chapter called capital gains. But interestingly, in this chapter also some gains are taxable. In this chapter also some gains are taxable. You will find some of the gains, even though it is one-time activity, even though it is not going to be recurring in nature, but those are also taxable in this chapter. That is why they have named it as profit and gains. It is not just profit from business that is taxed here. Some of the gains are also going to be taxed, what we will very soon see. Of business. Business is very simple, my dear friends. Trade, commerce, manufacture. Business is trade. Buying and selling is known as trade. Transportation, insurance, banking, other types of logistics, service sectors are known as commerce. Conversion of raw material into finished product is known as manufacture. Business means trade, commerce, manufacture. And no such definition, explanation is there for profession. Profession, we are made to understand. Profession, we are made to understand what is profession. One is academical. Knowledge acquired through formal system of education. Doctors, lawyers, chartered accountants, company secretary, consultant engineers. Knowledge acquired through formal system of education. Next is exhibition of skill. Next is singers, musicians, actors. Exhibition of skill is also profession. Knowledge acquired through formal system of education. Exhibition of skill is also profession. And then comes this word called vocation. Profession includes vocation. Electrician. Is there a formal system of learning? Is some institute giving him certificate that he is a certified electrician? No. Plumber, mechanics. Okay? It has gone to such extent that Swamijis are known as vocation. No, no, no. We are preaching, we are teaching Vedanta, we are teaching Bible. Are you getting money? It is known as vocation. My followers, due to my extraordinary knowledge, gives me money, donation, which is a capital receipt, which is not one time, which is not repeating one time, because my followers are so enjoying my Vedanta and life learning, they are giving me. So this is a capital receipt, argued. But the court said, no, boss, it is your main source of income. And trust me, this is a Supreme Court judgment in Nityananda's case. Okay, so you can imagine, there they said this is vocation for you. This income is taxable under PGBP. Okay, how can you compare me with a plumber? Both of you try to solve problem. Okay, so right, at least he solves. we have a proof that he solves. Okay, so vocation, the chapter heading has a reason. Every section has a reason. Okay, so profits, gains of business or profession. Our law, the initial lawmakers are very knowledgeable, and I stop my comment there. Okay, our law beautifully segregates business and profession. Very nicely segregates business or profession. Majority of the time, they know that a businessman goes for accrual basis of accounting, whereas a professional only after completion of service he gets this money, so it will be more of cash basis of accounting. And this is incorporated. Here they will use the word gross turnover, whereas here they will use the word gross receipt. If you now recollect 44AB, if the gross turnover exceeds 1 crore, 10 crore, when it comes to profession, gross receipt exceed 50 lakhs. 44 AD when we see presumptive computation. So nicely they will incorporate these words. Nicely they will incorporate these words. That is, whenever it is business, they will try to use the word turnover. Whenever it is profession, they will use the word receipt. Like that, it is well segregated in our law. All through the law, you will find receipt, turnover, receipt, turnover. Am I clear to you? Okay. So this is the explanation for the heading as such. Profits, gains. So four falling branches in your notebook. In your notebook, four falling branches. In your notebook, four falling branches. You got the book, you got the notebook. Yeah, I have a soft copy. Okay. Under profit, first profit, surplus from a recurring activity. Profit, surplus from a recurring activity. Under gain, surplus from a isolated activity. Under business, trade, commerce, manufacture. Under profession, academical knowledge, exhibition of skill, and vocation. And vocation. Are you clear? Okay. So the heading of the chapter, profits, gains of business or profession. This is the explanation for the heading. Before going into this, let us also understand some things. In the center of the next line, write split of business. Split of business. Split of business. Three falling branches. Three falling branches. Speculative, specified, general. Speculative, specified, general. Okay. We divide business into three. Why are we dividing? Only for one purpose, set of chapter. Okay. Only for one purpose, but we will understand. Under speculative, transactions without actual delivery of goods. Transactions without actual delivery of goods. So you call it as future. In the future only the delivery is going to happen, but today itself you enter hedging, whatever you call it as. Transaction without actually delivery of goods. Specified. Section 35 AD. No. Specify. In the specified column, section 35 AD. That section we will see. Okay. General. Anything other than speculative and specified. Okay, put a bracket under that and write, for all the three, put a flower bracket and write, this is only for set off of losses. This is only for set off of losses. Am I clear to you? This is only for set off of losses. The third preliminary note, which you are all well aware, but I want you to again write down. Okay. Two tax regimes. Two tax regimes in the center of the line with two falling branches. Two tax regime. Two tax regime in the center of the line with the two falling branches. On the left hand side, we call it as optional tax regime. On the right hand side, concessional tax regime. Online students, are you able to follow? My dear online friends? Two tax regime, two falling branches, optional, concessional. Under optional, claim all benefits and pay tax as per Finance Act. Okay, you can pay tax as per Finance Act. On the concessional, okay, forego benefits and pay tax as mentioned under income tax law. Forego all benefits and pay tax as mentioned under income tax law. Okay, okay, you will forego the benefit, but you will pay taxes as per IT law. Okay, right? So, if I ask you what tax regime you are in, and like our classroom, if the assessee is also silent, okay, okay, he will fall under concessional tax regime, and that is why it is known as default tax regime. By default, if you are silent, you fall under concessional tax regime. You fall under concessional tax regime. That is why it is known as default tax regime. Okay, so there on the right hand side, also known as default tax regime. And I don't go for the popular explanation of people in your what do you call, in your colloquial language, you will call it as old tax regime, new tax regime. No, it is not old. Okay, it is not old. Emotions are more superior. Okay, so I have been majorly traveling in that tax regime for a long time. So I am yet to come to a conclusion that I should call it as old. So I will not call it as an old tax regime and a new tax regime, though I know colloquially people say so. Okay. If you want to claim all the benefit and pay tax, choose. That's why it is optional tax regime. You should choose it, and it will not be a uh, it will not come to you with silence. Okay, so that's the two tax regime: optional tax regime and concessional tax regime. Generally, for your practical purpose, tomorrow when you read a section, you should understand it. What is meant by a charging section? What is meant by charging section? Okay. If the rates are inherent in a section, it is known as charging section. If the rates of tax is inherent in a section, it is known as charging section. Section 112, long-term capital gain 12.5%. Okay. Section 111A, STCG on which STT is paid 20%. 112A, LTCG on which STT is paid, first 125 nil, balance 12.5. 115 JB, minimum alternative tax rate is there in that section. 115 BAC, up to 4 lakhs, nil 4 to 8 lakh, 8 to 12, 12 to 16, 16 to 20, 20 to 24, rates are there. 115 BAA, BAB, rates are there. So be sure, my dear friends, when I say 115, you can close your eyes and say he is talking about a charging section. When I say 115, when I ask you to write 115, you can close your eyes and say, I am talking about a charging section only. The rates will be inherent in the section. Okay. Section 4 of our law says your total income will be taxable at the rates given in Finance Act. So that is also a charging section, even though there were a section, the rates are not given, but it refers to the place where the rates are given. In all other cases in income tax law, lot of charging sections, we tried to consolidate in 115. We have tried to from 112 it starts, 111 it starts, 111, 112, 113, and it goes on up to 115, which are known as charging section. Am I clear to you? Okay, this is known as charging section, but all these things till your examination. Okay. I also call this batch as one last time with the 1961 law. Okay, so, so I know there is indirectly a sword hanging over your head that I have to somehow clear this time, because otherwise I have to remember the new section numbers, new provisions, at least the section numbers, new aspects I have to remember, and should I study it, etc. Sitting here with all confidence, with the God's grace, I'll tell you, we will not be studying new provision as a student. We will study it as professional. Okay, so but for me it is very emotional to say that I'm teaching now. I have to forget all the section numbers. So for very easy to say for me 115, then I'm talking about charging section. Now I have to say no, 67, 58, so many things are there. So okay, one side it's challenging, another side it's emotional. So this is the two regimes of taxes. Next introduction is about a section, a provision which will travel from today to the end of the class and all through your life. Okay, is in our income tax law, there are two modes of payment. Okay, in our income tax law, when I am not even talking about payments, sometimes I talk about receipts also. They call one as approved modes. They call something as approved modes, and they don't call the other as unapproved. That is a colloquial word, and we call it as otherwise than by approved modes. Okay, there are two modes of payment under income tax law, and this is very important. Starting from our depreciation provision under section 32, 35 AD, whether I am coming under tax audit or not depends on this. Whether I am coming under presumptive taxation or not depends on it. Whether my stamp value on which date I should take depends on this. This is going to be a very long travel for us. 269 SS, everything is going to come and talk about this. Okay, though PGBP has the major provisions, but all through we are going to two modes of payment, two falling branches. One side approved, another side otherwise than by approved. Okay, and you have to necessarily remember only this: cash, bearer check, cross the check. On the otherwise side, three things are there: cash, bearer check, cross the check. Okay, three things are known as otherwise than by approved modes: cash, bearer check, cross the check. Remember, even a cross the check is an otherwise than by approved, not an approved. Here on the approved side, account payee check slash draft. Account payee check slash draft. NEFT, RTGS, IMPS. NEFT, RTGS, IMPS. Okay, approved payment gateways. Okay, all these are so credit card, debit card, sorry, credit card, debit card. These are approved. So don't worry about approved. Remember what is not approved or otherwise than by approved. Okay, cash, bearer check, cross the check. So tomorrow in your practice, if somebody asks you, this is known as only a crossed check. This is only known as account payee check. Okay, remember, a crossed check can be endorsed, whereas an account payee check cannot be endorsed. So crossed check is not an approved modes of payment. All these things I understood only on reading that particular case law, which said crossed check is it can be endorsed. Otherwise, like you all, I also left a negotiable instrument act in choice. Okay, during our early areas of study, and then understood, oh, I should have read this difference between crossed and account payee check. Okay, so in lot of provisions, we need to understand whether adjustments, when we read, we should understand cross the check. If they give, that means they are coming to one of the unapproved modes of payment. Am I clear to you? Okay, so all these things will be essential to make us understand the provisions. We start with section 28, basis of charge. Section 28, basis of charge. Section 28, basis of charge. As I told you, okay, it speaks about income. Normally, in all other chapters, they will just give you an how I am taxing. Section 50. Every chapter, first section is basis of charge. Salaries is taxable either on due basis or on receipt basis, whichever is earlier. Annual value of a property consisting of land and building opportunity thereto, of which the assessee is the owner, is chargeable under IHP. Any gain arising out of transfer of capital asset is taxable. Any income, any receipt which is not taxable under the other four heads is taxable, IFOs. But section 28 is unique. It gives you a list. These are business incomes. It gives you a list itself saying these are business incomes. And it says this is how it is going to be taxed. One, profits and gains. Profits and gains from business or profession carried on during the previous year. Profits and gains from business or profession carried on during the previous year. We know what is profit gain, business profession, and it says carried on during the previous year. Okay. To tax, listening. To tax an income under this year, business or profession should be carried on during the previous year. Am I correct? Am I correct? Okay. So, in the financial year 23-24, I wound up my profession. I said I'm no more practicing. I wound up my profession. In the financial year 25-26, a client who has not paid his fees in the financial year 23-24 came to me and paid the fees. Is it taxable? No, not accrual. Here, receipt basis. Profession is always receipt basis. Is it taxable? Yeah, I take that answer. So, the case went to court. The court said it is not taxable because your law says business or profession should be carried on during the previous year. And he was saying, this is the reason for birth of section 41. Bad debts recovered. Even after your business is discontinued, it is taxable. Professional fees received, even after you discontinue your profession, it is taxable. So we gave a new name to this. These are known as deemed income. These are known as, this is the reason for birth of a section. That last words carried on during the previous year became the birth of a new section, just for your knowledge. Second, okay, second. In the second, in the center of the line, you are writing compensation. Compensation. What is this? Friends, I enter into a contract with her saying that every month I will supply 1 lakh units of raw material to her. In couple of months, I was unable to meet the quantity or the quality. There is a clause, breach clause in the agreement. If I am unable to, I have to compensate her to the monetary extent. I pay her. For me, it is a business expenditure. For her, it is a business income. Remember, this is one time only. Normally gain, compulsory acquisition, government pays compensation, gain, capital gains chapter, insurance compensation, capital gains chapter. But here, that's why the title is profits and gains. Some gains are also taxable here. Interestingly, compensation for breach of contract. Compensation for breach of contract, the receiver, for the receiver, it is taxable as a business income. I will parallelly tell you for the payer, it is taxable, it is allowable as a business expenditure. It is allowable. Friends, to just tell you, in one of the questions which we will study in assessment of company, the adjustment they said is, assessee is in the business of construction. For the West Bengal government, they constructed a flyover. And the flyover did not meet the standards. Assessee paid a penalty of 16 lakhs. Okay. Assessee paid a penalty of 16 lakhs. Our mind will read it as penalty. In the agreement, that is known as penalty clause. But actually what the assessee is paid is compensation. Penalty is violation of law. I'll speak about it. Penalty is violation of law. This is violation of breach of contract. This is just breach of contract. You cannot call it as penalty. You're understanding the difference? So this will be taxable. The compensation received will be taxable as business income, and for the payer it is allowable expenditure. Okay, so breach of, very popular adjustment in our questions. Okay, compensation. So three falling branches. Compensation, three falling branches. On the extreme left, okay, for breach of contract. For breach of contract. Okay, my dear friends, when I say breach, it will look at hard word. But actually, if I have not fulfilled any contractual obligation, I am liable to pay compensation. For the receiver, it is taxable as business income. In the middle, for change in agency or managerial agreement. For change in agency or managerial agreement. Am I clear to you? Okay. Friends. Okay. I am supposed to supply a mission and I should complete the installation within 6 months. But I completed in 12 months. For the delay in completion, I paid compensation to the assessee. I have not completed. Is this breach of contract? Yes. I'm supposed to complete it within 6 months. So income tax department argued this as income taxable because it is breach of contract. No doubt it is breach of contract. But Supreme Court took a stand where the compensation received, take your time and understand, where the compensation received is directly related to an asset, then it should be adjusted with the cost of the asset. Now, if the cost of the asset is 40 lakhs and I have paid a 1 lakh compensation, now I can claim depreciation only for 39 lakhs. Only for 39 lakhs I can claim depreciation directly, where the compensation is directly related to an asset. It should be adjusted with the cost of the asset. My dear friends, in the third batch, you are starting what I am saying, you are writing Saurashtra Cements Limited. In the third batch, write down Saurashtra Cements Limited. Held by the Supreme Court. Held by the Supreme Court. Where compensation is directly related to an asset. Where compensation is directly related to an asset. It should be adjusted with cost of the asset. This is important. Okay. Question number 8. Especially Saurashtra Cement. Okay. Third, normal writing only. Third, export incentive. Export incentive. Hyphen. Any export benefit like duty drawback, comma, cash compensatory support, comma, sale of import entitlement license. Sale of import entitlement license will be taxable as business income. Will be taxable as business income. From the top, I'm repeating. From the top, I'm repeating. Please understand. I have imported, I have exported to the tune of 10 crores, which means I am bringing foreign currency to India to that extent. I have exported to the tune of 10 crores. Government tells me for 5 lakhs worth, I can import without any duty. Import entitlement license. I can import up to 5 lakhs without paying any duty. It is an incentive given for my bringing foreign currency. But I don't have anything to import, whereas she has something to import, for which she need to pay a duty of 10% or 20%. 1 lakh she has to pay the duty. She tells me, you give me your import entitlement license, I'll give you 30,000 rupees. I sell my license. Normally, sale of license, capital gains chapter. Here, why did I get the license? For my business, for my performance of my business. So when I sell the import entitlement license, whatever compensation, whatever consideration I receive is taxable under PGBP. Whatever I get, because most popular in our examination is sale of import entitlement license, okay, was credited to the profit and loss account. Don't do any adjustment. Yes, it is a correct treatment. Assessee has not recorded sale of import entitlement license in the business income. Instead, it is recorded as capital gains. Now make the adjustment. No, it should be treated as business income. Am I clear to you? Import entitlement license. Fourth, the popular remuneration, comma, interest, comma, any other payment received by a partner from a firm. Received from a partner by a firm. Received by a partner from a firm. So partner's remuneration, interest on capital is taxable under PGBP. Partner's remuneration and interest on capital are taxable under PGBP. It is not that partner's remuneration is taxable under salary, etc. It is taxable under PGBP. That is 40B. We will study that. Next. Income of any association, income of any association, comma, institution, income of any association, comma, institution from its members. Income of any associations, institutions from its members. Example? That's beautiful. Okay, we should not search external examples. ICAI, whatever they receive from the membership fees. Okay, we also don't know why we are paying. They also don't know why they are receiving. But it is taxable, and for the institute, it is taxable under PGBP. Next, the most interesting, again, the most questionable, perquisite or benefit, perquisite or benefit received from carrying on business or profession. Received from carrying on business or profession. Perquisite or benefit received from carrying on business or profession. Any perquisite, my dear friends, any perquisite, any benefit, the most important. Okay. In the future classes, I will relate it to section 194R. That is where is the TDS for this is there. Any perquisite or benefit. She is the agent of my company for achieving target. I am giving her a gold coin. For achieving target, I am giving her a gold coin. Income tax law says the fair market value of the gold coin is a business income for her. It should be recorded as business income for her. Okay. I give Maruti car. The fair market value of the car should be recorded as business income. For achieving target, I am taking the agents to a trip to Bangkok. For achieving target, I am taking the agents to a trip to Bangkok. The ticket cost, stay cost should be recorded as income in her books. She comes to income tax department and tells, boss, I have two options. Either I should go or I should forego. I cannot go and tell him, sir, had you taken me, you would have spent me some 75,000 to 1 lakh. please give me to me in cash. I cannot tell that. Either I should go for the trip or I should forego that totally. So how can you tax this as perquisite in my hands? An income tax department realized the problem. So what have we written? Perquisite, benefit, carrying on business or profession, and then they added the words whether monetary or non-monetary. Whether convert, write down the further words, whether convertible into cash or not. So initially we thought, oh, they are thinking to give us the benefit. They made, oh, in law I missed these words. Whether convertible into money or not. So yes, now if she goes for Bangkok trip, it is taxable. If you don't go for Bangkok trip, both of us, okay? I'll also not tax, you need not also return it as income. Whether convertible into money or not, it is taxable. Okay. For conducting a surgery successfully, a very complicated surgery successfully, if the patient gifted car to the doctor. We appreciate both of your good gesture, but the taxman says, you received a car, no? Please give me the doors of the car as tax. Okay? So tax has to be paid on that by the doctor, by the lawyers, by the chart accountants. If you receive any perquisite, any benefit in the course of carrying on business or profession. As an agent, I have received benefits from the company. Okay, we are going to see this doctor-related case law in a later stage. Okay, and if you enter a doctor's cabin, you see everything in his table sponsored. All those are supposed to be treated as income in the hands of the doctor. Okay, any purpose or benefit received in the course of carrying on business or profession, whether convertible into money or not. In the capital gains chapter, we will read a provision. Conversion of asset into stock in trade. So far, I was holding all my investments as asset. Now I begin my finance company, convert that investment into stock in trade. This is capital gains. Next point, conversion of stock into asset. Conversion of stock into asset hyphen FMV will be taken as business income. FMV will be taken as business income. Vasant & Co. constructs their own office. 5 air conditioners which are there in the showroom as stock, they take it for their office. You have sold it. Had an external person come, what price you would have sold it? Recognize it as stock sale in your books of accounts. DLF constructed 14 floors. In the 11th floor, half of it, they are going to use it as their own office. That had you sold it, what would have been? So, conversion of stock into asset. Asset into stock, capital gain. Stock into asset, business or profession. Are you clear? Are you clear? Income is said in section 28. After this, we are only going to read it in section 41. What is income? Any business or profit and gains of business or profession carried on during the previous year. Compensation, except compensation for an asset. Cash compensatory support or any other export incentive received. Whatever is received by a partner, okay, whatever is received by an institution from its members, perquisite or benefit received in the course of carrying on, whether convertible into money or not, and of course conversion of stock into asset. Am I clear to you? Okay.
So compensation, there's a breach of contract. So instead of the supplier, instead of paying 1 lakh, வாங்கும்போதே 10 lakhs பதில் 9 lakhs வாங்கிடுறாங்க. So in that case, that 1 lakh is it compensation or?
Yeah, I can answer it now. Also, that is compensation. So in your books, the first entry you would have passed purchase account debit to creditors 10 lakhs. Now you are settling 9 lakhs. Creditors account debit 10 lakhs, to bank 9 lakhs, to deemed income 1 lakh. That is dealt in section 41. Yeah. Okay, friends. Okay. Apart from this, one other place income which I want to bring it here and write. ICDS 7 hyphen subsidy. Sorry, I should have asked you to write in the center of the line. No problem. ICDS 7 hyphen subsidy. 3 falling branches. 3 falling branches. ICDS 7 hyphen subsidy. On the extreme left, okay, for depreciable asset. For depreciable assets. Under that, write the treatment to be adjusted with cost of asset. To be adjusted with cost of asset. Okay. For depreciable asset, it should be adjusted with cost of asset. Any subsidy received, government grant received. In the middle, for non-depreciable asset, which means for land. Okay. For non-depreciable asset. In the extreme right, general subsidy. For example, if you start an industry in a backward area, we will provide you 20 lakhs, 25 lakhs, like that. Okay. Put a bracket for the 2 and 3 to be treated as income. To be treated as income. Remember, subsidy for land is an income. Subsidy received for land, accounting might say that it should be adjusted with the cost of the land or it should be taken as a liability, but income tax law says no, it is treated as income. All general subsidies are also income. Am I clear to you? Okay. Heading, case laws pertaining to income. Heading, case laws pertaining to income.
Perquisite for received for carrying on the car example. So I receive a car. Same assessment here, I sell it for 5 lakhs. So let's say the market value of the car is, let's say, 7 lakhs. I sell it for 5 lakhs. So if 7 lakhs income or into 5 lakhs income.
I'm again asking you one other doubt to answer this question. Who are you? Are you a businessman or a non-businessman?
I receive it for carrying on business.
That car will become block of asset for you.
Reduce.
It will only reduce the block of asset value. It will not be treated as a, even if you are a doctor, lawyer, if you are a businessman, you are supposed to record it that 7 lakhs. You will record the income as 7 lakhs and take it to the block of asset. And then reduce that 5 lakh, the sale value, from the block value.
I can record that at doc value of FMB.
Yes, at FMB. Yes, sir. That's where it's set in 194R. When we read that circular, I will tell you again this particular. Can I, friends? Okay. Case laws pertaining to income. Again, three falling branches. Again, three falling branches. Use the margin space also if you need. Okay. Extreme left. Extreme left. PGBP versus IHP. PGBP versus IHP, income from house property. Middle, PGBP versus CG, capital gains. Right, PGBP versus IFOS. Okay. Right. You have 5 houses and you don't have any other income. You let it out and earn. Is it business income or IHP for you?
IHP.
Even though it's your main source of income. If there is a specific head, you should only tax it under that fund. You are OYO homes.
Business.
You are understanding? You will ask, first let us understand why this confusion. If you are taking it under IHP, only 2 deductions are allowed. Standard deduction, interest on borrowed capital. If you take it as a business income, every other expenditure can be claimed, including depreciation. Even interest can be claimed. So she will try to argue it as business income, whereas the income. But for a OYO homes, you will always call it as business income. So how to segregate? How to segregate? Please understand first, listen to me, and then we'll take down. The Supreme Court said, if your main business is letting out of property, so it should be in the object clause. It should be in the object clause of your company memorandum or in the partnership deed. It should be there in the object clause. For all of us, that is the most easiest. Sir. Please bring it. So Supreme Court is not just stopping there. If your main object is letting out of property and your primary source of income should be that. In my P&L account, 51% or more of the income should be from letting out. If these 2 conditions are satisfied, it is taxable under PGBP, otherwise IHP. You're clear? On the extreme left, start with this. Chennai Properties and Investments Limited. Under that, where the main business is letting out and the predominant income, predominant here is 51% or more, okay? And the predominant income is from such activity, then it is taxable under PGBP. 2 conditions should be there, not just main business alone, not just main business alone, okay? Okay, friends? Okay. The Gujarat state government announced a subsidy, fertilizer subsidy. The cost of manufacturing comes to 300 rupees, but please sell it for 250 rupees. We will support you for the differential component. But the Gujarat state government was unable to give the money. So they said, I will give you freely tradable fertilizer bond. So 500 rupees per kg. Let us take some 50 lakhs worth of bond they gave me. I sold it for 30 lakhs. I sold the bonds for 30 lakhs and recorded 20 lakhs as business loss. Income tax department said, what you have sold is a capital asset. Debentures and bonds are capital asset. It should be only treated as LTCL or STCL and not business loss. What to do? You're right, but Roberting. I'll borrow his word. The Supreme Court asked, why did you give him bond? Had you given him subsidy, where he would have accounted it? Business. Just now we wrote subsidies or general subsidy. Bond is given in lieu of subsidy. So the loss should be treated as business loss. Middle branch, PGBP versus capital gains. Gujarat State Fertilizer Corporation. Gujarat State Fertilizer Corporation. Under that, any loss from sale of bonds which are issued in lieu of subsidy, any loss from sale of bonds which are issued in lieu of subsidy shall be treated as business loss. Okay. Okay. Right. Next. For getting a contract, I should give bank guarantee. For getting bank guarantee, I should either give collateral or keep margin money as deposit. From that deposit, I earned interest. The court has held that this interest is a business income and not IFOS. The court took a stand. Is the deposit out of surplus funds? IFOS. Interest is taxable under IFOS. Is the deposit mandatory for your business operation? Not out of surplus fund. Without that deposit, I would not have got that business opportunity. So the interest received on that deposit is taxable as PG, business income. Am I clear to you? IFOS. K and Co. Held by High Court. interest on margin money deposit, interest on margin money deposit will be treated as business income. Sorry, once more. Interest on margin money deposit for bank guarantee. For bank guarantee will be treated as business income. So, what is the case law, friends? What is the case law? If a deposit is mandatory, it is not voluntary. I have not deposited the surplus money. This deposit is forced upon me. If the interest on margin money deposit for obtaining bank guarantee, it should be treated as business income. It should be treated as business income. I went for a IPO. I received share application money, kept it deposited in a separate bank account. After the issue is completed, after the date is completed, I refunded the excess application money along with the interest. That's what the company law says. And then the balance I utilized, I transferred it to my regular bank account for my operations. The interest earned, is it business income? Again, go back to K and Co. Is he willingly keeping it in a separate bank account? Company law mandated me till I complete my allotment. I'm not supposed to touch that money. So it is not a willing deposit by me. So the law said any share issue expenses adjust against that interest. Am I clear to you? Sri Rama Multitech Limited. SREE. Sri Rama, RAMA. Rama Multitech Limited. Sri Rama Multitech Limited. Under that, any interest from share application money kept deposited in a separate account, any interest from share application money kept deposited in a separate account is available for adjusting share issue expenses. Is available for adjusting share issue expenses. Is available for adjusting share issue expenses. Okay, so it's a business income. So friends, Chennai Properties, K and Co. These two are important. Okay, the other two is not much question, but K and Co and Chennai Properties are important.
Sir, in Gujarat State Fertilizer, is it only bonds or any other security?
Any other security. If you issue something in lieu of subsidy, it should be whatever is the treatment of subsidy should be the same treatment. Friends, income related case laws, Saurashtra Cements, where the compensation is towards an asset adjusted with the cost of the asset. Chennai Properties and Investment, K and Co. Okay, remember these things. I'll keep repeating this in the classroom so that in the examination it will strike for us. Am I clear to you? A quick read of section 28, please. Please read it.
If you don't mind, can you repeat the seventh part where FMV will be taken as
Sale value.
Non-compete now of one PGBP. Non-compete.
Non-compete is also compensation. Yeah.
Interest paid by firm to partner, even if it is greater than 12%, it is chargeable as business.
The 40B section says whatever is allowed in the hands of the firm is taxable as in the hands of the partner as business income. So it is not dually taxed. One time I will not disallow, another time whatever is allowed in the hands of the firm will be taxable in the hands of the firm. Online friends, hope you are following, hope you are clear with the discussion of income. Shall we? Shall we? I'm answering some of the questions. I'm answering, just listen to this. This I'm not making you right, but generally. Specify the treatment of the following while computing PGBP. Subsidy received as general contribution. It should be treated as income. Please hold. It should be treated as income, ICDS 7. Subsidy received towards construction of building. So it becomes a, okay, it becomes towards a depreciable asset. It should be adjusted with the cost of the asset. It should be adjusted with the cost of the asset. Okay. Okay. This will be, okay, where it is directly linked to a depreciable asset, then it will be adjusted towards cost of the asset. Compensation received for breach of contract. Section 28 itself says it is an income. Just now our friend was also saying non-compete fee. Okay, I will not participate in a tender. You all know that there was a bike by name TVS Suzuki. That was a collaboration agreement with a promise that after the agreement period, Suzuki will not manufacture their own bikes in India for a particular period. Non-compete fees. Your software should not be downloadable in India because they should use our software for this. Zoho enters into various things. Non-compete fees. Okay. Sale of import entitlement license is an income. Payment from a partner is an income. Travel expenses incurred by the company for achieving targets is an income, whether convertible into money or not. Whether convertible into money or not. Liquidated damages received by a company from the supplier of plant for failure to supply within the specified period. Saurashtra Cements Limited. Saurashtra Cements Limited. Okay, where it was held that any compensation received, okay, okay, which is directly related to an asset shall be adjusted with the compensation with the cost of the asset. So the, okay. Interest received on excess application money deposited in the bank, under what head it is taxable? Business income. In the year allotment is over. Not in the year it accrues, in the year in which allotment gets over. Okay. These are popular adjustments in the main question. When we do the main question, I will again repeat this. These are popular income related adjustments. Am I clear to you? Okay. Section 29. Taxable business income is equal to taxable business income is equal to revenue. We all know that section 28 and 40 minus allowable expenses. Revenue minus allowable expenses. We all know the stress is on the word allowable. Okay. In accounts, profit is equal to revenue minus expenses. But in income tax law, profit is equal to revenue minus allowable expenses. You have written revenue minus allowable expenses. From the allowable, you should draw 3 branches. On the extreme left, expressly allowed by law. Expressly allowed by law. Section 30 to 37. Middle, expressly disallowed by law. (40) and 40A. Allowed, third branch. Allowed only on the basis of payment. (43B). Okay, so 3 things. Allowed by law, 30 to 37. Disallowed by law, 40 and 40A. Allowed only if you have made the payment. Am I clear to you? So, revenue minus allowable expenses. Are you all following, Aja? Okay, fine. Friends, I told you income tax law, the originally well-designed law. Okay, but 30, 31, I always wish it should be clubbed with 37 itself. That's nothing new, etc. No. Anyhow, if the law, understand this, if the law wants to give deduction as a percentage of asset, if the law wants to give deduction as a percentage of asset, they will make it fall under 32. Depreciation. Previously, there was something known as investment allowance, additional depreciation. Everything will fall under, because it should be given as a percentage of asset. If the law intends to give asset itself as a deduction, it will fall under 35. If the intention of the lawmaker, scientific research asset, asset purchased for scientific research, I want to promote research, I want to give 100% of the asset value as deduction, go and make it fall under 35. Scientific research, specified business, agricultural extension program, skill development program, where deduction has to be given as a percentage of asset, 32. Where asset itself needs to be given as deduction, 35. That is how it is. The first three sections, 30, 31, 32, asset-based deduction for building, for plant and machinery, depreciation. Deposit-based deduction. Normally, deposit is surplus money. But I'm going to give, that is 33. 35 I told you. Okay, so like that we are going to split and read. First, heading asset-based deduction. First, I am walking into allowable expenditure. In that, asset-based deduction. Asset-based deduction. Okay. As I told you, the first two sections are simple. So we will put it as box. Section 30, section 31. Section 30, section 31. Section 30 for building. Section 31 for plant, machinery and furniture. Okay. Under section 30. Section 30 is for building. What are all allowed? Rent. Next line. Repairs and maintenance. Next, insurance. Next, taxes. So we all know if it is capital repairs, it will not be allowed. Otherwise, regular repairs and maintenance, etc. will be allowed. Am I clear to you? Okay, for a building. In section 31, the straight relatable word, higher charges. Repairs and maintenance. Put a tick mark. Same. Insurance. There's no taxes as such in our country for plant and machinery. For house property, we have for building, we have municipal taxes here. So any section 30 and 31 actually has nothing. Okay. So we might read it as 16 sections. 29 has nothing to do. It's just how to compute 30, 31 or but everything is compensated by the next section. Okay. Everything is compensated by the next section so much that we should complete it today. So much is there in section 32. Section 32, depreciation. Section 32, depreciation. Section 32, depreciation. So we make it mandatory to compute the depreciation. Okay. In income tax law, depreciation is mandatory. I will forego depreciation. Is not an option to you. You should mandatorily compute depreciation. You will wonder, sir, if they forego, only our profits will be more. Why is that income tax department is making it so mandatory? Very simple. I know in loss making years you will forego and try to compute it in the profit making years. I know if I give you a tax holiday, first 5 years you need not pay any tax. Apdiya, first 5 years I will not compute depreciation. 100% of the profits are exempt. I will not claim depreciation. From the 6th year, I will start. So the income tax department is clear. Depreciation here is mandatory, boss. You are not having the option of not claiming it. It is mandatory. Okay, right? Income tax law has certain conditions for claiming depreciation. 4 falling branches. Last branch is a smaller one. 4 falling branches. 4 falling branches. Extreme left, it should be a specified asset. It should be a specified asset. See, depreciation is only for a specified asset. Under that, building, plant and machinery, furniture and fixtures, intangibles. Intangibles. Okay, right? It should be a specified asset. 4 assets are specified assets. Building, plant and machinery, furniture and fixtures, intangible. Under that, okay, in a different color pen, write down land and goodwill are not specified assets. Land and goodwill. Now, in income tax law, even if it is purchased goodwill, you cannot claim. Land and goodwill are not specified assets. Okay. Okay. Building, plant and machinery, intangibles, furniture, fixtures, and it will not include land and goodwill.
Why
Huh?
not even purchase?
I'll come, sir. I'll come, sir. Sir?
Why not even purchase goodwill?
Because of us, we try to inflate the value to a very larger extent. Okay. Income tax department fights chart accountants, uses chart accountants. Nowadays, chart accountants are the best assessing officers they have, because they put so many questions in form 3CD that if you start answering all questions, you become an assessing officer. Yeah. Second, should be owned by the assessee. Should be owned by the assessee. Should be owned by the assessee. Depreciation can be claimed only by the person who owns the asset. So, in a lease transaction, only lessor can claim the benefit of depreciation. Under that, ownership includes beneficial ownership. Ownership includes beneficial ownership. I'll explain that. Ownership includes beneficial ownership. Third, it should be used for business or profession. It should be used for business or profession. To claim depreciation, the asset should be used for business or profession. What do you mean by used? Very good words. It is not actual usage. It is ready to use. Why I am saying this? Sir, I have a spare machinery. If my main machinery runs out of order, I will use the spare machinery. Last year, my main machinery was in good condition. Does that mean I cannot claim depreciation on the spare machinery? No, no. It was ready to use. My office have a 5-day power backup. After 5 days, if there is an issue, I have a generator also. Okay, you can tell them. You can tell them to be little silent. Class is happening. You can tell them. Okay. So please understand, last year I never had a power failure beyond 5 days. So my power backup itself took care of it. Does that mean generator I cannot claim depreciation? No. Okay. So under that, usage includes active as well as passive. Usage includes active as well as passive. Fourth, block of asset method to be followed. Block of asset method to be followed. Okay, from the top one by one. 4 conditions. Condition 1, it should be a specified asset. It should be owned by the assessee. It should be used for business or profession. Only block of asset method of depreciation. Okay, I'm starting. It should be a specified asset. Specified assets are if I can ask you, no, you only can. No, sit. Is plant and machinery the same? No. Building, plant, machinery, furniture, fixtures, intangibles. Furniture and fixtures are the same. Furniture, fixtures, but both are almost the same. But machinery and plant are not the same. What is plant? Friends, what is machinery? Any process equipment that converts raw material into finished product is known as machinery. Acceptable. Any process equipment that converts the raw material into finished product is machinery. Fine. What is plant? Transformer, which enables me to manufacture. It is not manufacturing anything. But without that, pipelines that bring water, other things into my factory is plant. Pollution control tower, that is not doing anything. Without that, I am not meeting industrial standards. Is plant. Plant without which my business cannot run. Electricity, transformer, that is known as plant. So, anything without which my business cannot run is my plant. When you go down the Gemini flyover on the other side, there was a theater called Anand Theater. At that time, plant had 25% depreciation, building had 10% at that time. Anand Theater said, our building is a plant. Without which, where will I project the film? How can people sit? Chola Sheraton Hotel said, our building is a plant. Otherwise, everybody has to stay in Nungabakamai Road. Okay. So our building is a plant. Then we withdrew that explanation. Some explanation we have never made. You will wonder. Income from house property. What is house? House. Sir, what is house? House park. We did a very big research and all and said anything attached with a kitchen is a house. And said, what an explanation. Hotels became house. Restaurants became house. And then we asked back, what is kitchen? Oh, we'll withdraw. Like that. Honestly telling you, some terms we go by the general parlance. So here we are unable to explain plant. And you know what injustice we did? We started using the term plant and machinery. Sir, furniture fixture, you can use it together, sir. Plant and machinery cannot be used together. Plant is different, but we are unable to define. So, together, plant and machinery. Wait, sir, plant is the, no. Plant. If that is a crime, what the income tax law defined a plant is like suicide. He asked me one question. I don't know whether you, sir, in your specified asset, vehicle is not there. Income tax law says vehicle is a plant. Anybody who loves law will love to immediately commit suicide. Okay? Yep. Okay, we defined the plant, sir. We defined, I told you, no, section 43 supports. Okay? So, under these diagrams, for the first, section 43, subsection 5, plant includes, it's an inclusive definition also. Plant includes no, it's a theory. No, it's a running theory. No, that diagram is over. Now every point I'm explaining. Plant includes scientific apparatus, vehicles, data processing equipment, computer. How is that plant? We don't know. Data processing equipment. Okay. If so far you have felt very sad about it, next you will start weeping. Electrical items. Sir, AC is a plant, sir. In your office, you are putting 15% depreciation for AC, treating it as plant without understanding plant is something bigger. Tube light is plant, sir. Okay, tube light is plant. Projector is plant. Camera is plant. Fan is plant. Calculator, if you want to capitalize, you call it as plant, sir. Okay. Electrical appliances or equipments, electronic items, and they didn't leave there, etc. Okay, right? So these are plant. We know what is intangible. I'm not giving you the definition. Know-how, patent, trademark, copyright, license. Specifically, they avoided the word goodwill. Know-how, patent, trademark, copyright, licenses. Okay, that is. So this is the term plant. Now remember, vehicles are plant. Why I am saying so much is, again I will repeat today, but I'm telling you, additional depreciation is available for plant and machinery. Suppose I am buying a vehicle to be used inside my factory. You will see these forklift vehicles taking raw material. Additional depreciation can be claimed for it. Suppose I am buying a computer for quality checking. additional depreciation because it is plant. Okay, right. Next, I'm talking about the second condition is usage. No, ownership. Okay, the second condition is ownership. I told you ownership is also beneficial owner. What is this beneficial owner? I need to explain it. My dear friends, our motor vehicles law says register vehicle in the name of a natural human being. Partnership law, if it becomes a human form, it will kill all other laws. You know that? If law gets human, partnership law can file defamatory case. You have an Indian Partnership Act, which is okay, very dynamic, which is, and then you have company law, which says, I will not allot shares in the name of the firm. I de-recognize it. I will allot shares in the joint name of partners, but not in the name of the firm. Motor vehicles law says you cannot register it in the name of the firm. Immovable property law says a firm cannot own any immovable property, only partners can together own. Then why should there be a law? Partnership law will feel very bad. Partnership law says if the deed is silent, partners' share of profit can be equal. It should be assumed to be equal. Income tax law says if the deed is silent, I will not treat it as a firm. 184, the words are there, sir. Partner share should be determined under income tax law. Because what happens? This year my income is low, her income is high. We are partners. So this year I will take more remuneration, she will take less remuneration. Next year, vice versa. So these type of problems which is happening. So they said partner share should be determined. But partnership law. So every provision of partnership law is countered by some other law saying, no, this is not applicable for us. Like that. A partnership firm cannot own vehicles. They only fund the vehicle. They only use the vehicle, but they cannot own. HUF cannot own. So came the concept beneficial ownership. It is not the legal ownership. The title deed might have some other person's name, but who is funding it, using the asset, can claim the benefit of depreciation. Okay, that term next. The term beneficial ownership means that person who has funded the asset and using the asset can claim depreciation even though it is not registered in such person's name. Even though it is not registered in such person's name. Third, I explained you what is passive usage. So I'm just writing third point. Ready to use will be eligible for depreciation. Third point, no, that space is enough. Ready to use will be eligible for depreciation. We start back. Block of asset. We start back with, write down block of asset. difference. The word block means group. The word block means group. Okay, in income tax, the word block means group. Block assessment for search and seizure, which means group of years will be taken up together and assessed. Transfer pricing adjustment made by the transfer pricing officer is applicable for block of years, group of years. Like that we will understand. Block means group. Okay. Assets of similar nature. Assets of similar nature. Assets of similar nature having same rate of depreciation assets of similar nature having same rate of depreciation will be grouped together and the depreciation will be claimed on group balance. Assets of similar nature will be grouped together and depreciation will be claimed on group balance. Okay. How convenient our law is. For example, if I have a factory building at Patna, one in Andhra Pradesh, one in Pondicherry, company law says factory building 1, opening balance, depreciation, closing balance. Factory building 2, factory building 3, like that, 3 line items in your Excel. In income tax law, factory building. A company has 50 cars. Company law and accountancy says car 1, registration number, make, etc. Opening WDV, depreciation, closing WDV, like that 50 line items. We are simple people. Only one line item, block of car. Are you understanding? TCS, Infosys, CTS, Accenture, Standard Chartered. Minimum 1 lakh laptops. Minimum. Imagine our asset register. Laptop 1, what is the make, what is the RAM, where it is, etc., etc. Opening, the depreciation, closing, 1 lakh line items in Excel. Why are you struggling so much? Only one line item. Computers. Block of computers. So, assets of similar nature having same rate of depreciation, both conditions, similar nature. Just because building and furniture has 10% depreciation, we cannot club them. They are not similar nature asset. A motor car used by Ola and a company are different because he is using it daily. So the rate of depreciation is higher. Car used for hire is 30%, but generally car is 15%, like that. So assets of similar nature having same rate of depreciation will be grouped together and depreciation will be claimed on group balance. Format of claiming depreciation. Let's start. Opening WDV as on 1st April 25 for all of us, the financial year 25-26. So 1st April 25. Can I? Can I? My dear friends, the format for claiming depreciation goes like this. Opening WDV, nothing but last year's closing WDV becomes the current year's opening WDV. No other value it can be except last year's closing WDV. Current year additions are divided into two based upon the date of putting it into use. Though the word is putting it into use, ready to use itself is sufficient. Put to use for 180 days or more. Put to use for 180 days or more. Okay. Technically, this will be up to October 3rd. Technically, this will be up to October 3rd. Okay, this will be from October 4th. Why am I splitting it into additions into 2? Where I put to use for 180 days or more, I can claim 100% of the eligible depreciation. I can claim 100% of the eligible depreciation. Where I am putting the asset into use for less than 180 days, I can only claim half of the eligible depreciation. I can only claim half of the eligible depreciation. This is only in the year of purchase. I am having an asset in the opening balance. This year I used it only for 100 days. Close your eyes, claim full depreciation. Only in the year of addition, I am splitting it into 2. First of purchase, second of purchase. First of purchase up to put to use for 180 days or more. Second of less than 180 days. If I purchased in the first of, full depreciation, whereas in the second half I can only claim half of the eligible depreciation. Are you clear? Are you understanding? Online friends, you are clear?
Yes, sir.
Thank you. So, more than what am I coming to tell by this? I'm coming to tell you there is no concept of proportionate depreciation under income tax law. There is no such concept of proportionate depreciation under income tax law. There is no such concept. Friends, what is that? If I buy an asset on 1st of July, accountancy, company law and all says asset value into rate into 9 by 12. 1st of August, 8 by 12. 1st of October, 6 by 12. Whereas income tax law says no such thing. Claim fully. If I buy on 1st of January, 3 by 12. If I buy on 31st of March, 1 by 365. But income tax law says, why are you struggling? Claim half. There is no concept called proportionate depreciation. Only for the proportionate period it is used. Income tax law says first half, second half. That's all. First half full depreciation, second half half of the eligible depreciation. Then whatever is the sale value of the asset, reduce it from the block. Once more repeating, what am I reducing? $60,000 worth of asset sold for 50,000. Accountancy says asset account debits, I'm sorry, bank account debit 50,000, loss account debit 10,000 to asset 60,000. In income tax law, I will never know it is 60,000 value because it is all block of asset. Okay, there is a popular colloquial Tamil saying which says Jodila Aikyamaya. Okay, we will never know individually any asset's value. So entire sale consideration, reduce it from the block and then charge depreciation only on the balance available in the block. Only on this amount I will charge depreciation. First I will charge half of the eligible rate, etc. Am I clear to you? Am I clear to you? Popular rates of depreciation. Popular rates of depreciation. Nature of asset, rate. Nature of asset, rate. Building, 10%. Residential building, 5%. Plant and machinery, under that, computers and books, 40%. Buses, lorries, and car used for running them on hire. Buses, lorries, and car used for running them on hire, 30%. Other cars, 15%. General rate, 15%. If their law has not specified anything, general rate is applicable, 15%. Furniture and fittings, 10%. Intangibles, 25%. Am I clear? Okay. Keep this. As the class goes by, you will remember these rates. Normally in exam they give. If at all they have not given, you will recollect it. Shall we? Shall we? Slowly, clearly, we will start with practical working. Only you're not seeing the answers. We are only looking at the questions. We are only looking at the question in the classroom. We will work out. Assessee gives the following particulars of his asset. Compute depreciation. Plant and machinery, 23,40,000. Motor car, furniture, books, computers. Additions during the year: furniture, 11th September, 12th December. Computer, 11th November. Motor car, 1st October. Generator, not at all used in the new office as they had a power backup inbuilt, 1,18,000. Sales, furniture, and all the books available are sold. Okay, okay. You can just look into the screen. How many blocks are there? That's what first I am going to. 1, 2, 3, 4, 5, 6. 6 blocks are totally there. You cannot club plant and machinery and generator. They are two different types of asset. There are two different types of asset. Am I clear to you? Okay. I'm going to work out in first 3 assets, next 3. Computations. Please take down. Please take down. Question number 2. Please slowly, very slowly, please understand every step. Question number 2. Computation of eligible depreciation. Computation of eligible depreciation. Particulars is a lengthy column. 3 assets I am taking. Plant and machinery 15%. Plant and machinery 15%. Motor car 15%. Furniture 10%. Particulars, plant and machinery, motor car, furniture. Particulars, plant and machinery, motor car, furniture. Please work it. Don't. Shall I start? Opening WDV. In plant and machinery column, 23,40,000. In motor car, 11,43,000. In furniture, 6,03,000. 2340, 1143, 603. Additions. Under that, put to use for 180 days or more. 180 days or more. My dear friends, very slowly. In the furniture column, 46,100. In the furniture column, 46,100. In the motor car column, 7,82,000. In the motor car column, 7,82,000. In the furniture column, 46,100. Less than 180 days. Less than 180 days. In the furniture column, 16,410. In the furniture column, 16410. 16410. Deletions. Under that sale value, in the furniture column, within bracket 16,500. In the furniture, 16,500. Balance available for depreciation. Balance available for depreciation. Please do it. $2340, 1925, 6,49,010. Less depreciation. Less depreciation. For plant and machinery, 23,40,000 into 15%. for plant and machinery, 23,40,000 into 15%. For motor car also, 19,25,000 into 15%. 19,25,000 into 15%. Are you clear? Now, very slowly understand for furniture fittings, my dear friends. 16,410 into 7.5%.
5%.
Sorry, 5%. 5% plus 6,49,010 minus 16,410 into 10%. Once more repeating. My dear friends, for this I can claim only half of the eligible depreciation. For the balance, what do you mean by the balance? Total amount for which depreciation can be claimed is 6,49,010. Of that 16,410, I will claim 0.5, 50%. For the remaining, I will claim. So repeating, this into 5% plus this minus this into 10%. So I'm getting 64,081. Remember, for this I can claim only half of the eligible depreciation. So 16,410 into 5% plus 6,49,010 minus 16,410 into 10%. Any doubts, please ask me. Any doubts, please ask me. Clear? Clear? Can I move on? Can I move on? Okay. Are you clearly giving this? Okay. Next, the three assets. Particulars, computers, generator, books. In the order I am saying, please write. Particulars, computer, generator, books. Opening WDV. 72,140, 81,310 dash additions 180, less than 180 days, both are that, less than 180 days, 184,300, 1,18,000, 1,18,000. Deletion, sale value. In the books column, 26,000 within bracket. In the books column, 26,000 within bracket. Tell me only for computers and generator the depreciation. Work out only for computers and generator.
65.
Is it 65,716 for computers? 1,84,300 into 20% plus 72,140 into 40%. 1,84,300 into 20% plus 72,140 into 40%. For generator, 1,18,000 into 7.5%. Are you understanding this? Are you understanding this? Are you getting 65,716 and 8850? You want any explanation? I will. You're clear? You're clear about depreciation computation? Now, all of us to listen for some time. All of us to listen for some time. My dear friends, when does a block goes out of existence? When does a block goes out of existence? In two circumstances. If the sale value exceeds block value. Suppose here I have a minus 20 lakhs. Block is gone. Even though I might have a car, even though I might have an asset, still block is gone. When the sale value exceeds the balance away, or when all the assets in the block are sold, then also the bag becomes empty. When all the assets in the block are sold. In this question, it is said all the available books are sold for 26,000. All the available books are sold for 26,000, and that makes us to think that the block is gone. Am I clear to you? Okay. So it goes to the next chapter, capital gains. Please write down, and then we'll go for the explanatory notes. Short-term capital gain, loss, sorry. Short-term capital loss in the books column. Short-term capital loss, how much it comes to? 55,300. Short-term capital loss, you can see opening WDV is 81,310. You have sold it for 26,000. Short-term capital loss 55,310 in the books column. In the books column. Am I clear? Now I am writing notes. Notes. Note 1. Total depreciation is equal to sorry. Add up all the depreciation. Always depreciation is the answer. 778,397. Total depreciation is equal to 7,78,397. Total depreciation is equal to 7,78,397. Note 2. Assessee is eligible to claim depreciation on generator. Assessee is eligible to claim depreciation on generator as it is ready to use. As it is ready to use. Note 3. Note 3. A block goes out of existence in two circumstances. A block goes out of existence in two circumstances. A, when all the assets in the block are sold. When all the assets in the block are sold. B, when the sale value exceeds balance available. When the sale value exceeds balance available. Full stop, continue. The resulting gain or loss is treated under section 50, is treated under section 50 as STCL or STCG. In the given question, all the books are sold. In the given question, all the books are sold. Hence, STCL. Patiently look through, friends. Just give me a minute. Patiently look through.
Yes, sir.
This is the working also. That is for the assets. And this is the working for the books. Okay. Okay. Let me go to this format again. Opening WDV. Then comes additions. Friends, the most important thing is how to record additions. Concept of addition. Concept of addition. Addition is the question also. Record the correct value of the asset. That is what it is. Concept of addition. The value of asset. The value of asset will have the following inclusions and exclusions. Will have the following inclusion and exclusion. First, I will talk about additions. 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 Tell me whatever you know. Very popular things. Additions. Yeah, that's the value of the asset. What are all the addition? Installation charges. A. Installation charges. B. Freight, lifetime insurance. Freight, lifetime insurance, and other direct expenses.
Lifetime insurance, 31.
31, no, 31 covers yearly insurance. Lifetime insurance is added to the cost. 3. C. Okay. Any expenditure incurred till the date of putting the asset into use. Any expenditure incurred till the date of putting the asset into use. Suppose the director is traveling outside India to buy the asset, inspection of the asset, everything. Any expenditure till the date of putting the asset into use. 4. Trial run expenditure. 5. Borrowing cost till the date of putting the asset into use. Borrowing cost till the date of putting the asset into use. Am I clear? Okay. Give me time now. Need your complete concentration. Okay. Friends, I purchased an asset on 1/1/25. I imported an asset on 1/1/25 for $1 lakh. We call it as transaction date. I will record it at the date is 70. So I will record it as 70 lakhs. On 31/3/25, the dollar becomes 72 rupees. 72 rupees. Accountancy says restatement. This 2 lakh should be recorded as loss. In accountancy, income tax law has no such concept called restatement. Income tax law has no such concept called restatement. The next will only happen on settlement date. First, I will record it on transaction date. The next immediate transaction, the next immediate recording can only be on settlement date when it is at 75 rupees. I paid 75 lakhs. Accountancy calls this as loss. Income tax law calls this as increase in the value of asset. Forex difference between the date of purchase and the date of settlement. No restatement concept. No restatement concept. Forex difference between the date of transaction and the date of settlement should be adjusted with the cost of the asset. What accountancy says, it is only changing the creditor's value and not the asset value. Income tax law says, no boss, it also changes the asset value. To that extent, change the asset value also, increase or decrease. Is the class understanding? Okay. Section 43A. Section 43A. Forex difference. Exchange difference, exchange rate difference. Exchange rate difference between transaction date, exchange rate difference between transaction date and date of settlement. Exchange rate difference between transaction date and date of settlement shall be adjusted with the cost of the asset. Shall be adjusted with the cost of the asset. Are you understanding? It will be adjusted. Full stop, continue. No concept of restatement. No concept of restatement. Exchange rate difference between the transaction date and the settlement date should be adjusted with the cost of the asset. No concept of restatement. Is the class fully clear? Okay. Now going by this, this in this case 5 lakhs will be added to the cost of the asset. Very popular adjustment. Full stop. In the same point, please continue. Friends, in Honda seal case, in Honda seal case, it is held any hedging contract difference, should also be adjusted with the cost of the asset. Any hedging contract difference should also be adjusted with the cost of asset. Pakka clear? Pakka clear to all of us? Pakka clear? Okay. Hedging contract difference also, please adjust it with the cost of the asset. Is this clear, friends? Okay. Right. Exclusion, that is deletions.
இப்போ 31,325 or $50,000 pay பண்ணிருந்தோம்னா asset will be recorded at 50,000 into 72.
Very good, sir. 50,000 into 2, 1 lakh will be added on that date, sir. Deletions. A, trade discount. B, GST input where credit is availed. Okay, for motor car, you cannot avail the credit. So the gross value. For machineries, you can avail the credit. So the GST input. C. Sale value of product in trial run. Sale value of product in trial run. D. subsidy. E, compensation as mentioned in Saurashtra Cement's case. Compensation as mentioned in Saurashtra Cement's case. E, if not if, sorry, any payment in excess of rupees 10,000 made otherwise than by approved modes. What are all they? Cash, bearer check, cross the check. Any payment in excess of rupees 10,000 made otherwise than by approved modes, whole of such payment should not be included. So 5 lakh worth of asset. On an emergency, I gave 50,000 as cash. Asset value will now only be 4,50,000 and not 5 lakhs. Am I clear to you? Am I clear to you? Okay. Are you understanding?
Per day was.
Per day. Yes. In 40A3 we'll study that. Are you understanding? Okay. Are you clear, friend? Okay. For an asset, my dear friend, I did not deduct tax at source. For installation charges, I did not deduct tax at source. Can I record the full installation value as part of cost of asset?
Sir.
Yes. There is no inclusion or exclusion. Okay. 40A3, there is an exclusion, 10,000. Otherwise, in 2 questions, they have asked this. Installation charges of 1 crore was paid without deducting tax at source. 271 penalty will take care of them for not deducting tax at source. But that doesn't mean that will not be recorded as asset value. Are you understanding? Patiently read through once. My dear friend.
Sir, if the asset is purchased before 1st October, that is, you can claim full depreciation. For that asset, if the installation is done after the 1st October date, so if at all it is ready to use, it will be considered as
only after put to use, after installation.
So the entire depreciation will be calculated for half year.
Yes, half yearly. Yeah. But I'll give you a reverse example. Okay. I purchased an asset on 1st April and put to use. I settled the forex on 31st March. That difference, no, for that also full depreciation you can claim. Because asset is used from more than 180 days.
But in the additions column, you will show this forex on 31st March.
No, that's what in income tax law, there is no date and all. More than 180, less than 180. I'll show it as more than 180.
It is about when it is purchased.
It is about when I put to use.
Exactly.
Sir, if I purchased it last year, but put to use this year less than 180 days, then
Only half.
but in the additionally only in the year of purchase, then sir.
Addition, no sir. Additions. Year in which put to use. Okay. Last year I started constructing a building. Work in progress only. Only when the building is completed, it will come into the block.
Entire blocks for levels are
Who?
AO.
Will not. AO is auditor. More than 10,000, how did the AO find out? Auditor also gives a disclaimer. To the best of my knowledge. கண்டுபிடிங்க சார். யாராலே cross the check சார் cash கண்டுபிடிக்கலாம். Cross the check, bearer check itself you cannot, very tough to. Bearer check, at least in bank they give a cross check, you cannot know. The difference between account pay and cross the check, the bank statement will not reflect. True. Am I clear to you? Am I clear to you? Are you understanding this? Okay. Very important concept. This 43A borrowing cost. Every time it is repeated as an adjustment. Both 43A and borrowing cost. Shall we? Okay. I am going into a practical question. I am reading out the question. I am going to help you work out, but let us. Achyutan Limited gives the following particulars as regards their plant and machinery 15% block. Compute depreciation. Opening WDV. 3 machines belonging to the block were purchased. Machine Agni, purchased and put to use in the first half. Trishul, purchased in September but put to use only from December, second half. Machine Vayu, purchased and put to use in Jan. On analysis, you identify Agni is imported from Germany, Trishul from Belgium, and Vayu is an own machinery, indigenous machinery. The directors of the company had traveled to Germany for purchase of Agni. The cost of travel was debited to P&L account. The value of machinery is not yet paid. Trishul was purchased in September. Trial run went till December. Cost of trial run and the products generated in the trial run were sold on test basis for 40,000. Income and expenditure were taken to the revenue account. The machine was capitalized when the euro was 70. When the payment is made on 30th March 26, the rate is 87.5. Vayu was purchased from an Indian company. The supplier demanded advance payment of the purchase amount 8 months before supply. The same was made by getting a loan from Bank of Baroda at 12% per annum. The repayment starts after the machine is put to use. As per the bond policy, 80% was financed. An old machine has been sold for 184. We will very slowly start understanding. Question number 3. Question number 3. Working note for cost of addition. Particulars: Agni, Trishul, Vayu. Particulars, lengthy column, then Agni, Trishul, Vayu. Cost of asset. $14,20,000. $11,80,000. Sorry. The 11,80,000 and 12,65,000. 12,65,000. And friends, traveling cost for purchase of a machine, it should be added to the cost of the asset. Traveling cost for purchase of machine. In the Agni column, add 2,84,000. In the Agni column, put 2,84,000. Are you following? Are you all following? Okay. Next. Cost of trial run. Cost of trial run should be capitalized. Cost of trial run in the Trishul column 1,20,000. 1,20,000 in the Trishul column. Amount recovered by sales. Amount recovered by sales. That is, the products sold that are generated is sold. In the Trishul column, within bracket 40,000. You can even take the net cost as 80, but I want it explanatory. Okay, 40. Now understand. Now all of us understand. I imported Trishul when the rate was 70 euro 70. I settled when the rate was 87.50. So 17.50 per euro. The cost has gone up. Okay. Are you understanding? Section 43A adjustment. Section 43A adjustment. Section 43A adjustment. Okay. Hyphen 11,80,000 divided by 70 into 17.5. Once more repeating. 11,80,000. I had recorded it when the price was 70. So 11,80,000 divided by 70 into 17.5. The increase in amount I am paying. 2,95,000. In the Trishul column, 2,95,000. In the Trishul column, 2,95,000. Everybody understanding this adjustment? Everybody understanding this adjustment? Okay. Okay. Shall I proceed? Shall I proceed? Okay. Now, interestingly, Vayu's value is 12,65,000. The supplier demanded entire money as advance 8 months before the supply. So what I did, 80% of the value I took it on loan 8 months before supply, 8 months before putting it into use, and I have paid 12% interest. 12% interest. Are you all following? So my borrowing cost will be, my dear friends, 12,65,000 into 80% into 12% into 8 by 12. Once more repeating, 8 months I borrowed, 8 months before I borrowed for 12%. 80% of the value is what is funded by them. So 12,65,000 borrowing cost. 12,65,000 into 80% into rate of interest 12% into 8 by 12. 80,960. In the Vayu column 80,960. Now you will get cost of addition. Now you will get cost of addition. For all the 3 missions, you will get cost of addition. How much for Agni? 17 lakh? 4,000. That is more than 180 days. Agni is put to use in August. Other two are less than 180 days. You have the opening balance as 1875, sale value as 184, compute depreciation, rate is 15%. Do the depreciation now, friends. Do the depreciation now. This is the cost of additions you will hit at. 1704 is more than 180, less than one, I mean, more than 180 days. These two are less than 180 days. Please do the depreciation now. How much?
72682.
What is the depreciation? The opening WDV is 1875. The sale value is 184. $1875. 18,75,000. You're getting it, Kanan? You're getting it. No problem. 18,75,000. Addition more than 180 days is this 17,04,000. Less than 180 days is the total of these things. Deletions, they have given 184. So you are getting 62,95,960. Up to this, are you clear? For this, I can claim only 7.5%. On the balance, 62,95,960 minus 29,00,960. On this, I can claim 15%. Are you understanding? பொறுமையா போ. No issues. You want to show me? Yes, sir. Let them complete. I'll explain. Shall I? Everybody completed? Okay. And the question, I'm biggerly answering that question which our friend asked me. Why are you not considering depreciation on the sale value? I'll give you two answers for this. First answer, there is no proportionate depreciation under income tax law. Sir, I have sold the machinery only in December. For 9 months, accountancy allows me depreciation, April to December. Whereas in income tax law, no such concept of proportionate depreciation. This is one answer, which is primary. In the questions after questions after questions, I'm going to repeat this thing for you. Under income tax law, depreciation is a 31st March concept. No other date you can compute depreciation. In another 2 classes, you will be again and again bombarded with this statement of mine. Please remember, when I teach you slum sales, when I teach you demerger, amalgamation, in all these cases, I am again and again, no other date you can compute depreciation under income tax law. Only on 31st March, on that date, whatever assets is there, I will compute depreciation. If I have sold the asset, that's all. Even if I sell it on 31st March morning, I cannot compute depreciation on that. That is the primary thing you have to understand. Am I? Entire sale value we reduce. And we will never know what is the value of the asset. Clear? Clear? Okay.
There is also no concept of profit or loss.
Never. Never. Maximum short-term capital gain. Section 50. Are you clear, friends? Are you clear? Can I progress? Can I progress? Special cases of addition. Special cases of cost of addition. Special cases of cost of addition. special cases of cost of addition, shall we? Okay. Two columns. Circumstance, cost of addition. Circumstance, cost of addition. One, purchase of second-hand asset. Purchase of second-hand asset. In the cost of addition column, actual purchase price, or fair market value on the date of purchase, FMV on the date of purchase, whichever is less. Okay. Okay. Actual purchase price or FMV, whichever is less. Okay. What's your name? Okay. So what happens technically is, let's take I purchased an assets for 10 lakhs, a computer. Today the value is almost 2 lakhs in my books. That's a second-hand asset. I am selling it to Preeti for 8 lakhs. So that Preeti can now start claiming depreciation from 8 lakhs. The law comes and tells, boss, this transaction doesn't seem to be correct. When this is available in the market for 2.5 lakhs or 1.5 lakhs, a 5-year-old asset, why will she pay 8 lakhs and buy? The transaction seems to be of suspicious nature. So the value that Preeti can record is 8 lakhs or FMV, whichever is less. Are you understanding? Okay. Fine. My asset value is 2 lakhs. I sold to Preeti for 1.5 lakhs and purchasing it back at 10 lakhs. Sold the asset and buying back the same asset. A very exorbitant cost. The reason is now from 10 lakh into 40%, 4 lakhs depreciation as against 2 lakhs into 40%, 80,000 rupees. I'm claiming. Okay. Purchase of asset. Purchase of asset which was originally transferred. Purchase of asset which was originally transferred. So buying back the same asset. On the other side, actual purchase price or value prevailing in the books at the time of transfer. Value prevailing in the books at the time of transfer, whichever is less. So I can record it only at 2 lakhs, not at 10 lakhs. Okay. WDV on the date of transfer or purchase value, whichever is less. Third, holding to subsidiary company / vice versa. holding to subsidiary / vice versa. Okay. Value prevailing in the books of transfer or entity. Value prevailing in the books of transfer or entity. Okay. Whatever is the value prevailing in the holding company's books can only be recorded as asset value in the subsidiary company's book. Succession.
So the values as per tax or
As per tax. So you're right. As per income tax. Succession. Same. Value prevailing in the books of transfer or entity. Same. Okay, put a detour. That's value prevailing in the books of transfer or entity.
ஃபர்ஸ்ட் கேஸ்ல உங்களுக்கு ஷார்ட் டர்ம் கேபிட்டல் கெயின் 6 lakhs.
ஆமா ஆமாம். இப்போ ஒரு கொஸ்டின் போடுவோம், அதுல நான் உங்களுக்கு காமிக்கிறேன். STCL எனக்கு, STCG எனக்கு. நெக்ஸ்ட் செகண்ட் கேஸ்லயும் இந்த கேஸ்லயும் பிரீத்தி will have an STCG. Transfer of asset by holding by a foreign company to Indian branch. Transfer of asset by a foreign company to Indian branch. Okay. Next case also, the same answer is going to come. Building used for non-business purpose. Building used for non-business purpose. Now brought into business. Now brought into business. Building used for non-business purpose, now brought into business. Okay, two cases, friends. Building which I am so far using for house property, now I am converting it into my office. Or foreign company is transferring asset to Indian branch. The law says the value to be recorded in the books is, had it been used for business purposes in India from the date of its purchase, what would be its current value? Repeating, இந்த பில்டிங் வாங்கின அன்னிலேருந்தே நான் பிசினஸ்க்கு தான் யூஸ் பண்ணியிருந்தேன். What would have been its current value after providing income tax law depreciation? Okay. On the other side, original cost minus depreciation at applicable rates. Original cost minus depreciation at applicable rates from the date of its purchase. From the date of its purchase. From the date of its purchase till it is transferred. 1/4. That's all. That's the only date. That's why I always keep it. Am I clear? Am I clear to you? Okay. Read through once. Read through once.
transfer of asset from foreign company to Indian bank acceptable. So I'm getting depreciation. The building used for non-business purpose, you not have claim depreciation.
Building used to, so you mean to say that the original cost of that building, if after 5 years, 6 years, if I transfer, should be taken?
Fair market.
For building, the fair market value will be higher.
Correct.
So only they are not allowing. Can I? Can I? Okay. Before going into any questions, remember whatever I'm going to do, you are first understanding, then taking down, and also leave 2-3 lines. I have some more things to fill in the table. After that, take it down, but first understand. Okay, one question I expected is, what is that succession means? I have written succession. What does that mean? Please understand. Wait and take down. Amalgamation, that is merger, demerger, conversion. Conversion is further divided into, okay, sole proprietor to company, okay, firm to company, company to LLP. Once more repeating, what is succession? On any day with capital gains, I will just say succession is not a transfer. What is succession? Merger, demerger, conversion. What do I mean by conversion? Sole proprietor to company. Sole proprietor to firm is not a succession. Sole proprietor to company. Firm to company. Company to LLP. Please take down this. Leave 2-3 lines and then take down.
So firm to company includes LLP also.
The term firm means LLP also. The term LLP does not mean firm.
Practically, why would people opt for LLP instead of company? And a tax rates now just.
Agreed. But you have withdrawal problems, you have loan issues. If you give a loan, you become a deposit, rules will come into play.
So say suppose they wind up a company and the shareholders become partners. That will not be a conversion method.
No, it will not be a conversion. Company law also doesn't permits. Have you seen a case like that so far?
No, I'm not.
I don't think so. It's possible. Am I clear? Okay. So this is succession. Succession also always the value prevailing in the books of transfer. Now I'm going into question number 4A. This is the question which he was also referring now. Ramesh purchased the machinery on 15/12/22, 3 lakhs, eligible for 15% depreciation. He sold this machine to Ganesh on 1/1/25 for 320 when the fair market value was 250. Who, after having used the machine for business purpose, sold it back to Ramesh for 310. Compute the amount of depreciation and capital gains for both of them for the different years. Read through patiently. It's there on the screen. Read it. Shall I? Question number 4.1. In the books of Ramesh. In the books of Ramesh. Purchase value on 15/12/22. Purchase value on 15/12/22. 3 lakhs. Less depreciation at 7.5%. Depreciation at 7.5% because it is used less than 180 for 22/23. For 22/23. So 3 lakh into 7.5% makes it 22,500. Opening WDV on 1/4/23. $277,500. Less depreciation at 15% for 23/24. Okay. How much? Okay. Value opening WDV on 1/4/24. 235,875. Less sale value. Less sale value on 1/1/25. He has sold it for 320. No question of doing depreciation on any other date. Even in exam, don't get the should I do depreciation till 31st December? No, sir, nothing. Less depreciation, I'm sorry, less sale value, 3,20,000. STCG for FY 24/25, STCG for FY 24/25 as the block ceased to exist. How much? 84,125. All of us understanding this? All of us following 84,125. All of us, last rows, friends, all of us. Opening WDV on 1/4/25. Opening WDV on 1/4/25. Nil. Purchase back of same asset. Purchase back of same asset. What Ramesh does is he buys back the same asset. Okay. Under that, actual purchase price, have a inner column and write 3,10,000. Actual purchase price, have a inner column and write 310. WDV on the date of sale. WDV on the date of sale, 2,35,875. 2,35,875. That is the value on a book value on the date of sale. After that, I didn't provide any depreciation. Whichever is less, take it to the outer column. Whichever is less, take it to the outer column. Less depreciation at 7.5% for 25-26. Is it clear? Is it clear? Okay, how much you are getting? 17,691 and 218,184. Are you understanding? When you buy back, it has been recently tested. What is at the time of sale and what is at the time of buying back? In the books of Ganesh. In the books of Ganesh. In the books of Ganesh. Purchase of second-hand machinery on 1/1/25. Purchase of second-hand machinery on 1/1/25. Under that, purchase price, inner column 3,20,000. Purchase price, inner column 3,20,000. FMV 2,50,000. Whichever is less goes to the outer column. Whichever is less goes to the outer column. Less depreciation at 7.5%. Less depreciation at 7.5% for 24-25. Opening WDV on 1/4/25. 231,250. 231,250. Less sale value 3,10,000. STCG for FY 25-26. STCG for the year 25-26. Are you understanding? Are you understanding this? Are you clear? Okay. These two questions are homework for today. You have to find out the 1425 value and put it. These two questions, question number 2 and 3 are homework. One is building used for non-business purpose brought into business. And the other one is transfer of asset. Can I? Back to your concept book. Back to theory. So addition is one main aspect. Please remember, one main aspect of many questions revolve around addition. Installation not charged or not added to the asset. Cost of asset, borrowing cost not added to the asset. Forex transaction, hedging, any one adjustment will come in the addition. Now, if I go back to the format, I understand that open, now we know additions, less sale value, the whole of the sale value will be reduced, and depreciation, which is mandatory, normal. Now come to concept of additional depreciation, 4 falling branches. Concept of additional depreciation. Concept of additional depreciation, 4 falling branches. Concept of additional depreciation, 4 falling branches. On the extreme left, only for manufacturing entities. Only for manufacturing entities. My dear friends, it is only for trading sector, professionals, okay, service sector cannot claim additional depreciation, only manufacturing. Under that, in the same point, write down publishing of books and power or manufacturing. Publishing of books that converts manuscript into finished product. So they say publishing of books and power sector are also manufacturing. Second condition, only for new plant and machinery. Only for new plant and machinery put to use in the year. Only for new plant and machinery put to use in the year. Okay, it is not for everything. It is only for new plant and machinery. Third, such plant and machinery should be used directly or indirectly in the manufacturing process. Such plant and machinery should be used directly or indirectly in the manufacturing process. Such plant and machinery should be used either directly or indirectly in the manufacturing process. Are you understanding? Okay. Okay. For second and third, put a flower bracket and write under that vehicles, computers, pollution equipment, used directly or indirectly will also be eligible for additional depreciation. Used directly or indirectly will also be eligible for additional depreciation. So if it is a new forklift vehicle, new electric vehicles to be used inside the factory, computers which are purchased for quality checking, they are all eligible. Fourth branch, rate of additional depreciation 20%. Rate of additional depreciation 20%. Full stop. Continue. Used for less than 180 days, 10%. Used for less than 180 days, 10%. Okay. Okay. Right. Understand now. The then Finance Minister Sri P. Chidambaram said in the Parliament that to improve the manufacturing sector, to improve Make in India, we are ready to give you 20% additional depreciation for new plant and machinery purchased and used in the manufacturing process. This is a promise Finance Minister has given. Income tax law says if it is used less than 180 days, the depreciation will only be 10%. Assessee went to the court. When the finance minister has promised 20%, how can you only give me 10%? Income tax department said, I am not giving you 10%. Had you purchased the asset in the first half, you would have got that 20%. The interpretation of the law says, if you put an asset into use for less than 180 days, you are eligible to claim only half of the eligible depreciation. Eligible is what finance minister said, 20%. You can only claim half, that is 10%. You're understanding?
Ordinary depreciation.
Huh?
That is only for ordinary.
No, no. That is for depreciation. That's all. Quote, in law, there is a term called Justum generis. Oh, sorry, harmonious construction. Harmonious construction. Two different provisions. Annual general meeting has to be conducted within 6 months from the end of the financial year. The gap between two annual general meetings should not exceed 15 months. Third, once in a calendar year. Three different provisions. Last year, I conducted in August. This year, if I conduct in November, I follow 2, but I violate 1. So the law say harmonious construction. By conducting before September, are you fulfilling all the 3? So do that. Harmonious construction. Yes, the finance minister is right. Yes, the income tax law is right. Let's do one thing. Where the assessee claims only 10% in the first year, why will he claim only 10%? Half. Okay, used for less than 1 year. The balance 10% can be claimed in the immediate succeeding year. You do one thing, balance 10%, take net, so that I am satisfying finance minister's speech also, and also I am not changing the law for this purpose. Are you understanding? Note 1. Where assessee is claiming only 10% in the current year, the balance 10% can be claimed in the immediate succeeding year. The balance 10% can be claimed in the immediate succeeding year. Note 2. Additional depreciation is for additions made during the year. Additional depreciation is for additions made during the year. Full stop, continue. Even if the block ceased to exist, it can be claimed. One of the finest interpretation is, it is not on balance available. It is on addition. Suppose an old asset is sold at a very higher value, block is gone. Still additional, normal you cannot claim, but additional you can claim. Okay. It can be claimed even if the block ceases to exist. Note 3, important note. Additional depreciation cannot be claimed under concessional tax regime. Additional depreciation cannot be claimed under concessional tax regime. Read through additional depreciation.
purchase plant and machinery in last financial year, but I put to use in this current financial year. The CPI put to
Yes, yes, by interpretation, yes. Date of putting the asset into use is only known as addition here.
Depreciation claim.
Exactly. Normal, additional, both can be. Suppose if you import the machinery in March and the installation is completed in April, only in the next subsequent year you can claim this benefit.
Yes, no, right here. 6
Can I?
Additional depreciation, even if the blocks which used to exist can be claimed. Assuming less than 180 days, blocks used to exist, I claim.
Next year 10%. I'm right now doing that question. Right now I'm going to do that question.
put to use and ready to use are
The same.
the same. Oh,
The same. Ready to use is known as put to use. We will have a question in partnership firm where they will say where the it's a total income for a hospital firm where they will say advanced surgery equipment was imported for some 30 lakhs and installed in the operation theater on 30th March. However, the surgery was performed only on 4th April. For 30th March, we will claim depreciation because it is put to use.
So now is it that ready to use and put to use are the same? If I get an asset and it is ready to use, I am not used it in the manufacturing process, that is for additional depreciation, it should be directly or indirectly, it should be there in the manufacturing process. So if I'm not using it, can I claim?
Yeah, the word passive usage is also to be accounted. The word usage means not necessarily it should be actively used. Passive usage also you can claim. You have purchased the plant and machinery, everything fitted, ready to use, but you have not yet used that before the end of the financial year. Claim both normal and additional. Can I? Okay. Mamekam Limited gives you the following particulars of plant and machinery, which is directly used in the manufacturing process: 15, 30, 40. Opening WDV, additions, sale, plant A and C more than 180 days, plant B less than 180 days, compute depreciation. Computation of depreciation. Computation of depreciation hyphen optional tax regime. Optional tax regime. Particulars block 1, 2, 3. Opening WDV 18 lakhs, 25 lakhs, 15 lakhs. Additions under that 180 days or more, 57 lakhs dash 17 lakhs. 57 lakhs dash 17 lakhs. Less than 180 days, dash 4 lakhs dash 4 lakhs dash sale value within bracket 8,000 within bracket 28 lakh 70,000 within bracket 32 lakhs minus 8,000 minus 2870 minus 32. Short term capital gain. No. Sorry. Even the third asset 32 lakhs only. So there is no. Okay. Balance available for depreciation. Case A 65, 75, 74 lakh 92,000. 74 lakh 92,000. Case B 30,000. Case C nil. Okay. Okay. Less depreciation. Under that normal. For block 1, simple. Whatever is the balance into 15%. 11,23,800. For block 2 also simple. Amount available is 30,000. That will be apportioned to the last purchased asset. 30,000 into 50%. So 15%. The actual depreciation rate is 30%. The actual depreciation rate is 30%. So I can only claim 30,000 into 15%. 4,500. Block C nil. Dash. Additional depreciation. 57,000 into 20%. 11,40,000. Block 2. 44 lakh into 10%. 40,000. 4 lakh into 10%. 40,000. Block 3. 17 lakh into 20%. 3,40,000.
Deletions 32 lakhs, 34 lakhs
Short term capital gain.
Short-term capital gains value. Considering normal depreciation or also.
No, sir. Depreciation will never come. No.
Okay.
Yeah. It is at this point you will get the short term capital gain. Because of depreciation, you will not get gain or loss. Okay, just you need not write this, but in exam, just to total depreciation. Additional depreciation is addition made if all other conditions are fulfilled. Even if the block ceased to exist, it can be claimed. It cannot be claimed under the, okay. As our friend was asking us, next year for this 4 lakh into 10%, 40,000. Even though the block is not there, that 40,000 can be claimed. Am I clear to you? Okay. Question is yours. Please do it sincerely and tell me the answer. For 2 years, you need to compute. Try it out, please. Try it out. Remember, first have the columns as particulars FY 24-25, 25-26. First complete 24-25, find out the closing balance, take it as the opening balance and do. Yeah, sure. Yes, Kan.
So last year I asked it, and this year I put it in December. So the normal depreciation will be in
In the year of putting the use, the term addition is purchased and put to use. The word purchase is a passive word. Put to use is the active word. So the year of put to use or the date of put to use only is counted. There are cases, not now, office puja was completed in March. Shifting happened in April. Assessee claimed it in March. They allowed it because it was ready to use. Ready to use. Okay. But if the puja had been completed with a half constructed building, tiles work is pending, roofing work is pending, etc. In that case, only in the year of putting it into use, even though the puja is over, only in the year of putting. Because there in construction industry, completion of construction certificate from the chartered engineer is the most valid thing. Online friends, are you getting this answer? Are you following it? Online friends, yeah. You're stuck breathing. You're getting. Where are you stuck? Can you tell me? I can help you.
So I calculated the depreciation. So the additional depreciation is where?
See, additional depreciation is only for additions made during the year. In the first year, 20 lakhs into 20%, 8 lakhs into 10%. That's all. 480. In the second year, 18 into 20, 1150 into 10. And in the last year, I have completed for this only 10%.
Yeah,
The
so
balance
additionally,
10%.
that
Yeah, the balance 10%.
that is where I make.
Okay, many questions come in the examination questions we are going to work. You will wonder, the opening WDV, the depreciation is a last year an asset was purchased in December. So that is an indication to us that last year they would have only claimed 10% additional depreciation. There will be enough hints as we do the comprehensive questions. Enough hints will be there. Only thing is our mind should immediately open up what they are asking. Okay, right. Just hold on. Lights and powers engaged in the business of power sector. Power sector is also eligible for additional depreciation. Compute the depreciation allowable. The company has opted for the depreciation allowance on the basis of WDV. Opening, purchase of second-hand machinery. You will never get additional depreciation. Only normal depreciation less than 180 days. Less than 180 days. Machinery Y purchased and installed. Normal, you can claim. Acquired and installed air pollution control equipment, you can claim. New machinery acquired and installed for the purpose of generation of power. Sale value of the old machine. I don't want to waste your time. Just we will see the answer. Okay. Remember, put to use. When we come to additional depreciation, 8 lakhs into 20% and 3,25,000. Why? Because this 2 lakhs for which you cannot claim additional depreciation. So only for 3,25,000 you can claim. And pollution control equipment is also available for additional depreciation. Directly in the generation of power, it is used. Am I clear to you? Am I clear to you? Okay, right. So remember additional depreciation. Concept of unabsorbed depreciation. No, concept of unabsorbed depreciation. What is that unabsorbed depreciation? What is that unabsorbed depreciation? Friends, my P&L account, gross profit 40 lakhs, operational expenses 35 lakhs, depreciation 10 lakhs. So net loss is 5 lakhs. Income tax law calls this 5 lakhs as unabsorbed depreciation. Was there profit before claiming depreciation? The profit available is not sufficient to cover the whole of the depreciation. The uncovered portion of depreciation is known as unabsorbed depreciation. Am I clear? The profit available, there was a 5 lakh profit before claiming depreciation, is not sufficient to cover the whole of the depreciation. The uncovered portion of depreciation is known as unabsorbed depreciation. Another example, GP 40 lakhs, OPEX is 45 lakhs, depreciation is 10 lakhs. Now my net loss is 15 lakhs. The law says unabsorbed depreciation is 10 lakhs. Business loss is 5 lakhs. Why is this understanding very essential? Lot of benefits unabsorbed depreciation enjoy. Lot of benefits unabsorbed depreciation. Even if there is a belated filing of return, business loss cannot be carried forward, but unabsorbed depreciation can be carried forward. Unabsorbed depreciation can be set off against any head. Unabsorbed depreciation can be carried forward for indefinite period. And few other in later stages I will tell you. Okay? Why? Why is this? Very interesting, friends. Business loss is discussed in the chapter. Carry forward of loss is discussed in the chapter 6. That is chapter 70 to 80. Section 70 to 80. Unabsorbed depreciation is in section 32. Unfortunately, in section 80, they use the word whatever loss mentioned in 70 and 71, there is a restriction. You should file the return on within the due date. But here, since it is in section 32, we started enjoying lot of benefit. Court also, in the recent case laws also, have favored that. Am I clear to you? Write down concept of, take these two examples, that's sufficient, and then we'll write down at the end. benefits of unabsorbed depreciation. Benefits of unabsorbed depreciation. A, can be carried forward even in case of belated return. Benefits of unabsorbed depreciation. A, can be carried forward even in case of belated return. B, indefinite period of carry forward. Indefinite period of carry forward. C, adjust against any income. B, indefinite period of carry forward. B. C, adjust against any income. Are you understanding? Are you understanding? These are all the benefits of unabsorbed depreciation. Okay. This will be very useful for us when we go for assessment of mergers, amalgamation, demerger. How unabsorbed depreciation is treated separately and business loss treatment is very different. Any income. How salaries they will not adjust. House property, capital gains, other sources. Yeah, they can adjust. Am I clear? Okay, right. So this is we stop here today. We stop here today. Tomorrow, I will start with proportionate depreciation. It's a lengthy concept, so we need half an hour for that. Proportionate depreciation. Complete the depreciation discussion with case laws pertaining to depreciation. Okay, so that with that, when we complete depreciation, it is like crossing half well of PGBP chapter. Okay, that's the lengthiest section ever in the income tax law, especially in PGBP chapter. Okay, as of now, winding up for the day, I'm telling you what we have done. The case laws that we need to remember from today's thing are Saurashtra Cements Limited, where we have said that if the compensation is directly related to an asset, then adjust it with the cost of asset, don't treat it as income. Chennai Properties and Investments, house property, it should be, main object should be that and predominant source of income, K and Co. Okay, where the bank margin money deposit interest will be treated as business income. These three are important case law. In income, we saw compensation, subsidy treatment, perquisite and benefits which are accruing to a business associate, how these are treated as business income. And the long travel depreciation, where we understood normal depreciation, especially what is addition. That is the questionable area. In various circumstances, what is addition? What needs to be included in addition? 43A treatment of forex and borrowing cost, repeated questions, and the additional and unabsorbed depreciation. Meet you day after tomorrow morning, 6 o'clock. We will be completing up to 35 AD, hopefully, by day after tomorrow. All the best, friends.
Thank you.
All the best, online friends.